Hey guys, welcome to my channel BB Radar. Today I am going to share my strategy, one of the best I would say. And let me first introduce my channel to you. This is a BB Radar, the bull's best radar. I have started this channel to the main mission of the channel is to educate all the retail traders, to give them a direction in their trading journey, to teach them all the technical analysis and give such a good strategies which I am sharing right now, and also share my trades for their motivation. So please check out all my videos on trading. So let's begin. Let me first explain what is a gap up or gap down. The gap up or gap down, they happen due to the pre-market session. Okay guys, and there are the two windows. The one for the retail traders, which is from 9:15 to 3:30, which in which we trade, and another is from 9 to 9:07. All the big players, they put their high quantity orders in that time frame, and because of that the price reaches on the higher levels and opens on those levels. So let me give an example. So suppose the stock closed yesterday at 100 rupees, and the very next day in the pre-market session all the big players put their orders on higher levels or the lower levels, so the stock can open at a 102 or 98, depends on the supply and demand. So if it opens at a 102, it will be a gap up, and if it opens at 98, it will be the gap down. So let's get back to my main point. This is Reliance on my screen. What I want to teach you guys is how to use these gap ups or gap downs as a guide for trading. This strategy can be used for BTST, positional and intraday. So listen to me carefully. So on this day, 5th of February 2018, what happened? Let's analyze. You can see the open high low data here. So let's begin. We are on the 5th of February, and the previous candle, you can see it closed at 904.35, and the next day on the 5th it opened at 894. So the difference, see the difference, around 40-50 rupees of difference there is. So it closed here, and the very next day it opened right here, and when it opened it started going down. You can see the tail of the candlestick. It started going down, and what happened is bulls rejected the price that no, this is a gap down, it is a gap down. So in the pre-market, so many people have sold this stock. So many people were thinking that the stock may be weak and going to go more down. So first, though, all those retail traders maybe they started selling, and then the bulls, the big players who trade in the 9:15 to 3:30 session, they rejected this price at these levels and pulled the price up and made this candle green. So what happened here? Just start it again. Let's start it again. The previous candle is red, closed at 904, and the next day it opened gap down. Gap down means in the pre-market there was a lot of selling in the stock, so this stock is weak, we may consider. And then what happened? At the end of the day, the candle became green. So there is a price rejection at the lower levels. So we call this a gap down failure, because the big players sold the stock gapped down, but the bulls rejected that low price, and they said that no, this is not the right price, or the stock shouldn't go down. This is the right value of this stock. So they pull this up, So this is a gap down failure. And see the next 5 days or 3 days what happened. Stock came up. Now the next case would be right here. Here you see the close of this candle is at 933.65 and the very next day open is at 937.65. See the difference, around 10-15 rupees gap up, but bulls was not able to sustain those levels, so the stock came down. And see the very next 2 to 3 days. You can use this as a deciding factor for intraday or positional or BTST. I'll tell you how to go into BTST trades. There is a huge gap up, and at 315 or 329 you will see that the candle is coming down than the open, so the candle is becoming red, so the gap up is failed. There's been a buying in pre-market, that's why the stock went up and it gapped up, but it couldn't sustain those higher levels and it came down, the candle became red, so it is a failed gap up. And 328 or 29 you put a order in futures or options, then it will be a huge profit next day, you can see. And in intraday also, if you would have entered in the next day only, it would have been a big profit. So this is how it works. See here also, there is a gap up, it couldn't sustain those higher levels, it came down and then down. So let's quickly look at some other stocks. Let's look at Havels. See, this is a failed gap down. It gapped down. So the pre-market there was a huge selling. People were expecting the stock to came down, but it came up in reality. So you can see the very next day. Next 3 days it was up. From if you had entered in BTST right here at 50, this is a 504.92. In next 2 to 3 days you would have been in profit. 506 to 521. It's a nice profit. The future slot is around 800 or 1000 for Havels, so it would have been a profit of 20,000. So let's look at some other stocks. Okay, let's look at Jet Airways, my favorite stock. I usually used to trade in the last month in this stock, and see here, okay, in this red candle the close was at 685.6 and the very next day the stock opened at 655. Here, right here, previous day close was here and it opened next day on 655, and then it gave the signal that it is a failed gap down. Pre-market they thought that pre-market everyone sold the stock, so the stock was weak, everyone was thinking, but in actual the candle ended up in green. So it is a false signal, false gap down. So you can see the rally, the next rally, and see this what happened here. It's really interesting, guys. It was a gap up, it failed to sustain those levels, and then you can see the rally, down rally. Let's look at some other stocks. Okay, let's look at Hindustan Unilever. Okay, see right here what happened. The first signal was generated here, it gapped up, failed to sustain those levels. See next 2 to 3 days what happened, all the candles are red. here gap down, the big gap down, the huge selling in the pre-market. See, stock came from 1352 to 1299, 1300, and then it gave the signal that it is a failed gap down, rejected those price, and then it came up and see the next rally, and here it gapped up, it went down, the failed gap up, then see the rally. It's really interesting, guys. See another stock. Okay, and see here it gapped down, but it was not a failure, it went down only. Nobody rejected this price. People were knowing, all the big players in the market, they were knowing there's been a selling in the pre-market and there's something in it, so they sold, everyone sold the stock and made the candle red, and it was a successful gap down. Okay, it was successful gap down. So this is not our setup. Let's see here. Okay, here it was a gap up. All the in the pre-market there was a buying, but in the after 9:15 there was a selling, so it was a failed gap up. See the next rally. Here also you can see the gap up, failed rally. So this is how it works, guys. Thank you for watching my video.